I think silver, I'm extremely bullish on silver. And I think that, gold, my projections are kind of in the next 18 months, gold goes to 3,000. In the next 18 months, silver goes to 50. Now, so that's in gold, that's up a 50%. In silver, that's up 100%. But as we all know, silver is much more volatile than gold. And when we're in a bull market, silver, look, gold never goes up 500%, in a 2-year period, and silver does.
Gold and silver prices are firmer in early U.S. trading Monday, supported by safe haven bids amid the Israel Hamas war and the potential for a wider Middle East conflict. December, gold was last up $5.60 at $2,004.10. December silver was last up $0.423 at $23.31. Silver recovered from a 2-year low on the escalation of geopolitical tensions, recession worries in key economies, and seasonal demand. The silver price has risen above $23 per ounce since the start of 2023 from the previous lows at around $18 in late 2022. Lawrence Lepard, founder of Equity Management Associates, expresses his bullish outlook on gold and silver, emphasizing the volatility of silver, especially in a bull market where it can outperform gold significantly. Lawrence projects that gold will reach $3,000 in the next 18 months, while silver will reach $50 in the same time frame. This represents a 50% increase in gold's value and a 100% increase in silver's value, underlining the potential of silver in a strong market. Regarding the stock-to-flow ratios, Lawrence sees that gold has a lower stock-to-flow ratio, meaning there is a more abundant supply of gold, affecting its monetary premium. On the other hand, silver boasts a higher stock-to-flow ratio, making it more sensitive to changes in demand. Even the solar industry's expanding need for silver could absorb a substantial portion of the world's silver production in the next 5 years. This anticipated increase in demand could lead to higher silver prices. Silver Institute Chairman Phillips Baker emphasized that silver is a vital component in solar panel production, and demand is expected to increase significantly in the coming years. Lawrence emphasizes the strong potential for individual demand for silver, especially in the event of a currency collapse. As per Silver Institute data, industrial demand for silver increased 9% last year. It was the highest level since 2010. He suggests silver eagles as a hedge against the devaluation of traditional fiat currency, reflecting a broader trend of turning to tangible assets to preserve wealth. We will now present clips from Lawrence Lepard's interview with Palisades Gold Radio. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
So gold is better as a store of wealth metal, and it took a lot of the monetary premium out of silver because stock to flow on gold is much lower. There's a lot of gold out there, and that's monetary premium is all, in my view, based on stock to flow. But as we all know, silver is much more volatile than gold, and when we're in a bull market, silver, look, gold never goes up 500%, in a 2-year period, and silver does. As we also know, silver has a monetary use, but it also has an industrial use. And there are a lot of really positive things taking place in the demand for silver market, the biggest of which is solar. And I've looked at some charts and seen some data that would suggest, and who knows, these are estimates, but it would suggest that in 5 years, to get to the kind of solar demand that China is pushing for and we're pushing for, the solar market could absorb half of the silver production in the world. Right now, it's closer to 15%. So that would be a big increase in the demand for silver, which would only be satisfied with higher silver prices. And obviously, we get higher prices, we'll mine more. But keep in mind that you don't just turn a switch and have more.
Yeah.
The process of discovering and building a mine is years, perhaps as long as a decade sometimes. So it's going to take a while till we get into an oversupply situation and the price will come back down again.
Yeah.
And that's, frankly, I think those are just kind of jacks for openers, because if it continues and the government doesn't do something to address the sovereign debt issues, I think gold's going to 5,000 and silver's going to 200. But that's a couple chapters out, and there are a lot of things that could happen. Central bank policy will obviously play a role here. And, to be frank, if they're able to continue to be hard asses for another, what I'm describing, I've always been early and ahead of my time and therefore wrong on an investment point of view. So what I'm describing could take another 6 months, 12 months, 18 months to happen. But mathematically, absent the government getting responsible, it seems like as sure a thing as I've ever seen, kind of in the investment field. I mean, it's a very high probability. Buying gold is expensive. I mean, just one gold coin is a couple thousand. Anyone can go buy a silver eagle. Do you know what I mean? And everyone likes to hold real money. And so, yes, I do. I think there will be enormous demand from individuals to buy silver. If we were ever to have an outright currency collapse where fiat were to become worthless, and this is why I own a bunch of silver eagles personally and just have them hidden somewhere, silver would probably be your everyday currency. I mean, I'm sure I could go to a farmer and say, hey, give me some of that beef or give me some of those eggs, and here's my $25. Well, now it's $25. At the time, it'll be more, but here's my silver eagle. You know what this is. I know what this is. I know a lot of guys in the trades in Massachusetts, blue collar guys, who they take all their money and they buy silver coins because they just know it's real money. They know the money they put in the bank is going to lose value. They know that silver will be worth more over time, and they're right.
In 2023, gold prices hovered between $1,800 to $2,000 per ounce. Whenever the U.S. dollar gained strength and U.S. real yields increased, gold prices tended to gravitate towards the $1,800 mark. However, recently there's been a resurgence in gold prices, propelling them back to $2,000. This revival coincides with lower U.S. real yields, the potential conclusion of tightening measures by the Federal Reserve and the European Central Bank, and ongoing Middle East tensions. Lawrence's perspective envisions that once gold convincingly breaches the $2,100 milestone, it's poised for a potential surge, possibly reaching $2,500 or even an impressive $3,000. He firmly believes that such an upswing would not only benefit gold, but also send mining companies on a rocket-like trajectory. According to Lawrence, this optimism is rooted in the substantial gold purchases made by central banks during the third quarter. Central banks worldwide purchased 337 tons of gold in the third quarter, which marked the third strongest quarterly gain of all time, though it was down 27% from the record bought in the same quarter last year. This trend suggests that a segment of the global economy is increasingly recognizing the superiority of gold as an asset compared to sovereign bonds, national currencies, and even stocks.
In the dollar, and by the way, in every other currency, it's making new highs except the peso. For some reason, the Mexican peso has been very strong, but set that aside. I mean, I put up charts on my feed on Twitter all the time. I mean, it's making a new high in the yuan. It's making a new high in the euro. It's making a new high in the yen. I mean, every other currency, gold in every in the rupee, gold in every currency, the ruble, gold in every currency is making new all-time highs. Full stop. It hasn't quite made one in the dollar yet, but it's very close. I mean, I think the intraday was 2070. I think high close was 2050. We were over 2,000 earlier this week or late last week. We're now under 2,000 again, I don't know, 1980, 1990 right now, somewhere in there. It's not far away. We're within 4 or 5% my view is when we take out 2,100 with authority, we're going to squirt up to 25 or 3,000, and the miners are going to go, berserk. They're going to do a rocket ship launch. But to me, the reason this is occurring is that more and more people are becoming aware of the problem. I mean, Tom, the number of people in the world that are aware of this problem is very low, but yet we had record third quarter gold purchases by central banks, just on Twitter, just this past quarter. And in turn, we'll probably have another record year, and 2022 was a record year for central bank gold purchases. So, some piece of the world is coming to see that this asset, gold, is better than sovereign bonds or sovereign currencies, and even better than stocks. I mean, that's the thing that's, until recently, the stock market, really represented a big competitor to gold because, why not? You just buy the stock market and you get, 15 to 20% a year. But that all ended in end of 2021. It went down hard in 2022. It's come back, but now as it starts to roll over again, I mean, I think, and as you know, investors chase performance. I mean, I couldn't find anybody to invest in my fund in 2018, right before it went up 4x.
Yeah.
And by the way, I had a ton of investors come in 2020, right before I've given half of that back. So, people chase performance. And so once gold breaks out to a new all-time high, you're going to get a lot of people who are going to say, oh, that means something. I got to go get some of that. And, there's a way this doesn't work, by the way. I mean, to be the devil's advocate here, if the government suddenly gets responsible then this isn't necessarily what we want to do. Right? You laugh, and I do too, and most people do, because it strikes me and all of us that the odds of that are rather low, but they're not zero. And perhaps as the problem gets worse, they'll realize they've got to get responsible, or else they're going to blow up the world. Right?
Gold and silver prices are set to remain strong due to geopolitical tensions, recession worries, and growing demand. Individual demand for silver is also foreseen to rise, particularly as a hedge against the devaluation of traditional currencies. What are your thoughts on the future price movements of silver? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.